All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and this is your market and option recap for Monday, June 25th. So we definitely had some volatility return to the market. At one point, the VIX was up about 40% today. It looked like the VIX might actually close on the highs today. You could see if we kind of draw this out a little bit. Big move today to get all the way from like a 13 today to up to almost a 20 today. And it looked like we were going to close on the highs today, but Navarro came on CNBC at 3:30 and kind of dismissed some of the rhetoric regarding the trade war and about China and investment and all that stuff. So we actually, for the first time of the day, we saw the price action of the VIX get below the purple line, which is the 50-day in there, and then it kind of crumbled. Same thing with the VXN. Remember, the VXN is the VIX for the Qs. Was bid pretty much all day today, closed up about 20% today, even though that tail off at the end of the day. But again, first close, we've got the first. This is again on the 5-minute bar. First time that it closed below this purple line was right when Navarro started speaking, and try to put out the fire in terms of the market volatility that we saw today. So what did we look like in the S&P today? So we did not hold this level. I thought the top of value might hold for the day. Nope. Pretty decent bout of volatility. I think at one point the Qs were down about roughly 3% on the day. They finished down 2.25. So nice little comeback at the end of the day. But, definitely some technical damage was done. You've got a couple things going on here. You've got the 5-period moving average crossing below the 20. That's a sell signal. We are holding on to this 50-day moving average. But, price is below the 20-period moving average. That's pretty much, we've lost the uptrend, for the time being in the S&P. So we'll have to see see what happens here. We'll see if we regroup. I think right now, positioning-wise, is going to be light for me, and extremely selective, which is what we've talked about in the Tribeca Trade Group newsletter the last couple weeks. We've talked about being highly selective. Why? Because I think sentiment got way too ahead of itself in terms of NASDAQ. NASDAQ sentiment was making an all-time high, I believe, just a couple weeks ago, and was continuing to do that over the last week. And and also we're going to be getting to a holiday, which is July 4th. Things are going to quiet down a little bit in terms of volume. I don't think there's going to be some major investing going on until you get past the 4th of July. And then as soon as we get after that, then we got earnings season. So, one of the things that I think has been going on in the market is just, that's been kind of fueling the market is, companies buying back their shares in the open market. I think that's really given the NASDAQ a lift the last couple weeks. There's been an underlying bid to the market. So one by one, those plans are going to start to come off, as companies get into quiet periods going into earnings. So it's going to be, I think, a little bit trickier market going forward. The Qs, they did manage to finish above the 50-day moving average, above value. But, for me, once you start to lose the 20-day moving average, in the major indices, it's time to kind of take your ball and go home a little bit and wait for some more constructive price action. IWM, which also held in there pretty good for the majority of the day, it was actually coming back. Same thing with mid caps. So again, this also lost the 20-period moving average, still above value like Q. So that's kind of your saving grace. Did get a nice bounce here around midday. Right up until 2 o'clock, and then we started to go lower. So that's the major averages. The other thing that I keep coming back to, which I was talking about a lot last week, are we are still the best house on the block. If you look at international markets, so global markets minus the U.S., and you could go through just about every chart. If you could find one that's in an uptrend, besides something like Saudi Arabia or a very small country ETF, the majority of them are broken below the 200-day moving average and now in downtrends. So, that's my rule of thumb. Once price gets below the 200-day moving average, you're now in a downtrend. And all of the major international markets are sinking, and they're sinking fast. So, I don't think that we can continue to rally when everywhere else is going down. I have a major problem with that. Something has got to start to move up. And I keep kind of holding out for that. I talked about that towards the end of last week. I showed, I think on Thursday's video, I showed a table of all the international ETFs that are below the 200-day moving average, and there's something like, I'm exaggerating a little bit, but I think there's 6 or 7 that are above the 200-day moving average, and there's about 50 of them that are below the 200-day moving average. So this cannot continue to go on where our markets do okay. And I think that was part of today, was walking into today and seeing that seeing Europe down, which by the way, Europe closed on the very lows of the day today. So the DAX just got absolutely creamed today. And there was put buying in the EWG ETF. So, this is getting, I think, pretty dangerous and pretty dicey in terms of what is going outside of U.S. borders. And I want to emphasize on that a little bit, because I know a lot of retail traders, they just are not looking at that. It's off kind of the radar for the most part. They're very in tune to looking at what the S&P is doing, and I even see this when traders are looking at what futures are doing. Half of them, they don't even look at what China is doing. They just notice, oh, S&P futures are doing this. Well, S&P futures are going to move on based on what Asia is doing. So again, all these markets are intertwined. They're interconnected. The U.S. market does not operate in a vacuum. So yes, I think it's the best house on the block, but it can't manage to, if all of the houses are on fire on the whole block, what's going to happen to the house of the U.S.? It's not going to be pretty. So that's the picture for right now, and I think unless these somewhere in the, outside the United States, that one of these markets, major markets, starts to go up, it's going to be really tough sledding going forward. In terms of option activity, there really wasn't that much to jump up and down about. It was very typical. We saw a lot of put activity today, which is very typical once volatility comes in. People start buying puts like crazy. So that's one of the things. I don't have the raw numbers of the put call ratio today, but I would assume that it's going to be pretty negative, which again is fine, as it should be. We need to actually see that for a couple days to see more protection being bought, that versus speculative calls. That will really kind of wash a lot of the weekends out of the market. So what did we see today? I mean, really not much in the morning. There was a nice eBay call buyer. That was one of the first orders that we saw. XPO saw some calls. Dow DuPont saw some calls. This was at the end of the day, but versus open interest. So I'll have to check that tomorrow. That's 3,000 of these September 70s. A little bit of Facebook calls once the VIX started to dip. CCL, which got beaten up pretty badly after earnings, they bought some January calls. But again, there was a lot of put orders. That one for EWG I thought was pretty interesting. July 29 puts. Again, don't know if it's protection, but again, you could see a lot of puts going up today. A lot in the Qs and IWM and SPYs as well. There was one Qs order that stood out to me. March 185 calls. These were not swept, but it was a pretty sizable order, and that's why it's on my recap sheet. 185 calls were purchased. That was a couple $1 million in option premium. All right, guys, so that is it for the day. So again, I think constructive that we did not finish on the lows, but we'll have to see what Asia does tonight. We'll have to see what Europe does tomorrow. They need to rebound as well. All right, guys, have a great night. See you tomorrow.